Half a year has gone by since the World Health Organization declared COVID-19 a global pandemic. And since then, it's disrupted everyday life, industries and whole economies. And hopes of a V-shaped recovery have long been dashed, and it looks like we're in for a long period of uncertainty on when we can resume business as usual. Today, we speak with Mala Nabar, Division Chief of the World Economic Studies in the International Monetary Fund's Research Department. Thank you so much for joining us from Washington, D.C. How are you today?
Thank you very much. It's good to be with you.
And well, before we get into the interview, it must have been an incredibly difficult year for you, just trying to make these projections about the world economy. I mean, how hard was it for you this year?
Well, this has been an exceptional year. There's tremendous uncertainty about where the global economy is headed, multiple sources of uncertainty, starting with the path of the pandemic itself, related to that, the fallout in terms of domestic disruptions on the economies that have been affected by the pandemic, the external component, the spillovers from weak demand, global weakness in global demand that's spilling over to trading partners, and of course the layer of uncertainty with respect to the financial system and financial conditions more broadly. So a lot of uncertainty and making projections in this environment has been very difficult. But we have now made two forecasts since the pandemic started, one in April, one in June, and we're coming up to another forecast in a few weeks. So we're learning more as the pandemic evolves, and we're learning more about how to think about this crisis and to form a view based on that. But even now, several months into this pandemic, tremendous uncertainty about where we're headed.
Well, you forecasted a 5.8% growth in world GDP next year, back in June, I believe. And well, which regions and economies did you see faring better relative to others, and which will be the slowest to recover?
Well, let me just say that when we talk about the growth rate that you mentioned, that suggests a sharp bounce back in global growth. But it's important to remember that this is actually from a very deep contraction that is projected for this year. So in some senses, seeing a mechanical rebound in growth next year is not that much of a surprise, given how deep the contraction is expected to be this year. But of course, the strength of that bounce back varies across regions, and the variation really depends on many factors. For example, the pre-crisis developments, the trends that the regions were on going into the crisis. Some were relatively fast growing, others were not growing that fast. So those pre-crisis trends are clearly important. The extent of the damage that the pandemic itself has done varies across the regions, and that's an important bearing on the forecast. The policy response to mitigating the crisis and to bringing economies back to paths of recovery has been different across different regions, and the strength of that policy response also affects the projections as we think about next year. Having said all of that, emerging Asia has been a global growth leader for many years, and we expect that emerging Asia will continue to assume that position next year in the bounce back as well.
And about this bounce back, you did mention that the bounce back wouldn't be a surprise, mechanically speaking, because of how badly we did this year. And even the 5.8% projection there for 2021, that was assuming that the pandemic subsides in the second half of this year. So that would be around now. But as we're seeing every single day, the numbers of cases and deaths are still climbing. Then are you preparing to downgrade your projection?
Well, we're watching the developments very closely, and that is a worry with how even in places that seem to have brought local transmission down to low levels, we're seeing upticks. And we pointed out before that this is a factor that we're going to look at very closely when we come to making our updated projections. So the situation is still unfolding, and we are keeping close tabs on it to see where things will go before we finalize our view for next year.
Well, in most projections, South Korea appears to have fared better relatively in terms of GDP growth. In most projections. What factors do you think helped its relative resilience, and what would you say perhaps are some risk factors that the South Korean economy needs to watch out for?
Well, I think a couple of important elements to think about when we think about Korea. First, in terms of the public health response, Korea had a very effective testing, tracing, isolation strategy that helped keep transmission levels relatively low compared to other places and did not actually require the imposition of prolonged lockdowns that have been deployed elsewhere. So that clearly helped. But combined with that public health response, we also saw on the fiscal side, on the monetary side, and also with the financial regulatory response, a very strong effort to cushion the losses from the crisis, to ensure that credit flowed through the economy, to ensure that the economy had the preconditions in place to start recovering once the pandemic came more under control in Korea. So those, I would say, are the combination of the public health response and the economic policy response that shapes the outlook for Korea. On resilience, I would say the pandemic preparedness in Korea was very different from what we've seen elsewhere, partly because there have been experiences of outbreaks of different kinds before, and so the public health authorities were in a sense, better placed to respond to the emerging threats of the pandemic. And also on the fiscal side, Korea entered this crisis with a strong fiscal position after years of prudent fiscal policy, and that helps in terms of resilience as well. Now, if you think about the risk factors, I would say, again, going back to what we were just talking about a minute ago, a lot of uncertainty about the path of the pandemic, and that's clearly a big risk factor in terms of both locally as well as globally, in terms of the possibility that there could be a resurgence, and that's clearly not going to be a favorable outcome for the outlook. There could be second-round effects on spending decisions with households and firms becoming more cautious, and that, of course, would also hold back the recovery. But on the upside, you might see favorable developments. We've seen vaccine research proceeding at an unprecedented pace, and that gives us hope that we might find out fairly soon about the outcomes of these phase 3 trials, and that would clearly have a favorable effect on sentiment. The external environment might actually strengthen more than what is currently projected, and that would obviously be a big boost to Korea's export sector. So I think when we look at the risk factors, there are clearly factors that would weigh on the outlook and what we call downside factors, but I think we also need to remember there are some upside factors as well, which could lead to better outcomes than are projected.
So it's not all doom and gloom ahead. There are some little bits of hope that we can look to there. But, well, it appears right now...
Well, again, a lot of uncertainty, but I think that's a fair way to put it, that even with the large number of downside risk factors, we mustn't lose sight of the fact that there are some upside risk factors as well in the projections.
Mm-hmm. Well, it does appear that right now there's quite little that we can do to stop the pandemic at the moment and its impact on our economies, of course. But then how can we then at least prepare ourselves to build resilient economies for the future in the meantime? I mean, what are some long-term adjustments that you think countries will inevitably have to make in going forward?
Well, it's an interesting time to consider that. I think the crisis has definitely focused many people's minds on this very important question about how we can put in place changes that lead to lasting improvements in the global economy. And I think that the question of resilience has to be considered on multiple dimensions. There's obviously the health dimension, where we have to improve our pandemic preparedness, and that can certainly be a big contributing factor to improving resilience. There's also the financial resilience aspect. We saw after the global financial crisis a little over a decade ago that important changes were made in terms of how banks were regulated and the kind of buffers that banks were required to maintain. And that seems to, at least so far, have paid off, with banks coming out of the first few months of this pandemic relatively less affected than a deep recession of this kind would have suggested. But risks have spread elsewhere in the financial system, to the non-bank sector, and also beyond the financial system to the corporate sector, with the buildup of corporate leverage in many countries. And there's also risks on the sovereign side as well. Many countries entered this crisis with high levels of debt. The crisis clearly has meant that they've the tax revenues have fallen, that expenditure needs have risen, and sovereign debt is going to rise in many countries coming out of this pandemic, and putting public finances back on a sustainable footing is going to require a lot of effort once the crisis fades. So that's another dimension of resilience that we need to think about. And very important, an additional dimension to think about, of course, is resilience on the environmental front, where there's a strong need for an aggressive climate mitigation response that addresses the climate change and the mounting damages that are coming from climate change and the catastrophic risks associated with weather-related events.
So really what governments need to think about is not a quick shot in the arm to boost the economy, but really long-term, what many are calling green recovery, I suppose, to a sustainable future. But for now, economists and policy experts appear to be rather divided over the whole lockdown versus economy dilemma. And of course, some economists like Paul Krugman have criticised the lifting of lockdowns amid the ongoing pandemic. And well, from observing countries around the world and their pandemic response measures, what's your view on this?
Well, if you think back to when we first encountered this threat, when news broke about different clusters around the world, it was very clear from early on that this is a highly transmissible virus. We have susceptible populations everywhere, and without a vaccine in sight and without therapies in sight, the important thing was to slow the transmission of this virus by slowing down face-to-face interactions. And that's the motivation for the lockdowns that we saw. And those lockdowns were essential to allow health systems to cope, to face up to the overwhelming demand for their services that they encountered in the early months of the pandemic. Now, of course, at the same time, when you slow face-to-face interactions, when you slow the economy down in that way, economic policies need to be put in place to cushion the pain for people and for firms. And that's what we've seen as well in many countries, where you've had targeted responses to cushion income losses for households through wage subsidies, through expanded eligibility criteria for unemployment insurance, through social assistance more broadly, cash transfers and measures of that kind. And similarly for firms, ensuring that their cash flow is protected and essentially to ensure that the ties between workers and firms are kept alive so that the economy can start recovering once the pandemic is more under control. And that was the motivation for the policy response that we saw in the early stages of the pandemic. But the way we think about these lockdowns is that they are, in a sense, an important investment in our public health, an important investment in the eventual recovery that will come about once the pandemic is under control.
And once the pandemic is under control, still, what other risk factors do you see to global recovery? Do you think the continued trade war between the US and China and the whole Brexit slowdown, the whole Brexit issue, do you think it's going to slow down growth?
So the trade tensions and the intensification of trade tensions, rising trade barriers, that's clearly an important risk in the global economy, which if they were to materialize, those risks, if they were to materialize, they would certainly weaken global manufacturing and lead global growth to fall below the baseline projection that we have. But beyond that, I would also list a few other risk factors. The financial system so far has held up very well, but we did see in March a very sharp tightening of financial conditions. And there's always a risk that could recur. And if that were to happen and financial conditions were to tighten very abruptly, that could tip some economies into debt crises, especially those that find it hard to roll over their debt or to attract new financing. So that's clearly a concern in terms of how vulnerable borrowers would deal with an environment of suddenly tighter financial conditions. And I would also list the widespread weather-related events that we're seeing. There's constant reminders of the risk that climate change poses to the economy, to loss of livelihood, and just generally the humanitarian toll that it's extracting. So the intensification of weather-related events could also have a negative impact on global growth outcomes. But I think when we talk about these downside risks, and there are clearly many of these, we also need to, as I said a few minutes ago, we also need to keep in mind that if things go well in terms of the search for a vaccine, and if we're able to scale up the production of that vaccine, if we're able to distribute it relatively quickly, that would certainly be an important element in slowing the rise of infections, and that could certainly put us on the path to recovery again.
Well, we've seen, most countries around the world are struggling economically from the impact of this virus. And of course, that includes developed economies. But when we look at the lesser developed economies, well, the IMF has in the past received some criticism from experts for imposing a one-size-fits-all lending scheme to developing countries. So what is it doing differently this time? I mean, what are some ways that the IMF could make more tailored support for countries?
Well, if you look at the IMF's response to this crisis, it's been a very swift response, an unprecedented response in some senses. The IMF has increased its ability to provide grant-based debt relief. It's enhanced its access limits to its rapid dispersing emergency financing facilities. It's extended new financing through its other lending facilities. And together with the World Bank, it made a very early call for the suspension of debt service by low-income countries. So in many dimensions, the IMF has really stepped up to try and help conserve liquidity for constrained countries and to ensure that they can channel their resources to fighting this health crisis and putting themselves in a position to recover from it. So that's an important comprehensive strategy that the IMF has followed. And more broadly, I would say that we've been constantly in dialogue with the country authorities that we work with, very close dialogue, and to understand their constraints, to understand exactly what's needed for these programs to work well in their environments. And that dialogue has really helped in terms of structuring our programs in a way that can help these countries tide over this very difficult period.
Well, hopefully, as you said, we can all look at the upsides amid all this pessimism and this doom and gloom, I suppose, and hopefully be on the path to a more sustainable and green recovery, as you mentioned. Well, I'm afraid we'll have to let you go now, but that was Malan Nabar. That's the Chief of the World Economic Studies Division in the International Monetary Fund's Research Department. Thank you so much for joining us today from Washington, D.C.
Thank you for having me.
And to our viewers, thank you as always for watching. We'll be back at the same time tomorrow here in Korea. Have a wonderful day or evening, wherever you are. Goodbye.